Why, hello, everyone. It's Chauncey Tice here, Profit Mode Financial Services. I hope that you're having an amazing day. Today, we're going to be talking about depreciation expense. In our last video, we talked about interest expense and how interest expense actually was something that was overlooked by a lot of individuals. And if you have a bank, a credit card, you want to go back and you want to look from the beginning of the year on each and every statement, and you want to gather the interest expense that you paid on each and every credit card. Okay, you want to make sure that you're accumulating that and adding that up. The next thing, if you purchase a piece of property, whether it's commercial or residential, if you purchase a vehicle, if you purchase a big rig, if you purchase any of those items, you want to make sure you have an amortization schedule, especially if you finance those. Okay, so if you finance any property, plant, or equipment, make sure that you have amortization schedules for those assets. Okay, so that's interest expense. So we're talking about depreciation. So with depreciation, you are able to reduce your taxable income by the depreciation amount that's allotted to you based on 27.5 years, in this case for this property. So with our $330,000 property, we're able to appreciate $12,000 per year. So this is what this looks like as far as on the financial statement side. So on the financial statement side, right here is what we're going to be looking at. We were able to do the $12,000. So that's the depreciation for the year. Then the interest, we went over that in another video. So you can check that video out to see how we came up with that number. Maintenance is going to be, any lawn care, if your garbage disposal went out or we had to have somebody to paint or something like that. That's all a part of maintenance. Taxes is going to be what gets paid to the municipality. So we have a total expense on this property for $39,849.45. That is the total amount of expenses, right? Now, let's take this a step further. If we were collecting rent of $3,000 per month on this property, that gives us a revenue total of $36,000 total, right? And then we get to take off this entire expense amount of $39,849.45, and we end up with a net loss of $3,849.45. Okay. Back when I was, learning about accounting in undergrad, we were taught that depreciation expense was considered a phantom expense. And the reason why they considered it a phantom expense was because that money didn't actually leave your bank account. That money actually, it's pretty much us recapturing it from the financing purchase of it. And the reason why that's so powerful is that, you're actually recapturing that expense and you're able to take it against it. Even in years where, you may have more revenue, you're still able to take that depreciation off of, it is able to reduce your taxable income. So it's very important that we make sure that we understand interest expense and depreciation, and make sure that if you finance anything, you want to make sure that you have the interest expense and you want to depreciate your assets, So this is something that, may be new to some people because they may be just about to purchase their first rental property, or they're about to purchase their first huge piece of equipment. They may cost them $20,000 if you're into manufacturing. So you want to make sure that you're protecting your money by having the proper accounting and having your book value of your assets updated. And a part of that is the calculation of depreciation. Okay. So once again, this example was on a $330,000 rental property hypothetical example. We use actual bank rates and we use actual rules set by the IRS to calculate how much you can predict what your tax return is going to look like. Okay, so if you have a rental property, you can actually, and you have more things going on, you can actually reduce your taxable income by having a rental property. All right. So that's another tidbit or a little bonus for you. All right. Until next time, stay profitable and stay great. If you found this information helpful, make sure that you share this, give this video a thumbs up and spread the word. I am going to be on a mission to bringing more information and knowledge necessary as we progress in 2024. And we're looking to be more sharp and aware of ways to protect our money and to reduce our taxes at the same time legally. All right. Y'all have a wonderful one. Hopefully you had an amazing new year, and I will be back soon. Bye-bye.